Hello and welcome to Follow the Money. I'm Robert Tan. Join us as we explore the tools and insights you need to jumpstart your financial journey. Today, we're zeroing in on the new tariff deal with the United States, one that left the Philippines with higher duties than before, while neighbors like Vietnam and Indonesia secured bigger reductions. We'll look at why this happened, what it means for exporters, and how it affects the country's standing in global supply chains. And joining us to break this down is JP Rivera, Senior Research Fellow at the Philippine Institute for Development Studies. Good afternoon, JP. Welcome to the show.
Good afternoon. Thank you for having me.
Okay, JP, let's start with this. Before we dive into the trade issue, could you briefly tell us about PIDS and the kind of work it does in shaping economic policy?
Well, Robert, thank you for this opportunity. So the Philippine Institute for Development Studies, or PIDS, is the Philippine government's policy think tank. So together with our research fellows and our researchers, we do evidence-based research on the economy, social development, governance, and trade. And our studies actually help inform our government agencies, the national government, regarding their decisions, legislative reforms, and international negotiations. Technically, our role is to provide the technical backbone for policy, which is objective analysis, forward-looking recommendations, and alternatives that policymakers can act on.
And now, when we're looking at the new tariff deal with the U.S., our neighbors, Indonesia and Vietnam, managed to secure bigger reductions while the Philippines ended up with higher tariffs than before. Now, what explains this gap in the outcomes?
That's a very interesting lens to look at, because for Indonesia and Vietnam actually negotiated, which is part of their more consistent and proactive strategy. So Vietnam and Indonesia actually have built credibility as manufacturing and supply chain hubs, and they've used that in their respective talks. They use it as leverage in their respective talks. While the Philippines, in contrast, we often negotiate reactively with a very weak forward-looking trade strategy, which we are working on now.
You've mentioned a weak negotiating strategy. Now, is that a matter where we should look at, or is there a deeper structural issue now in how we approach trade talks?
Well, based on recent studies about the US tariff, it is actually both a weak leverage and a structural issue, because the Philippines' limited negotiating leverage reflects the structural issue. We have a narrow export base, weaker integration into the global supply chains, and the limits of what we're currently using in our regional alliances. Well, the leverage and structural issues actually make us less indispensable as a trading partner compared to our neighbors, specifically Indonesia and Vietnam.
Now, the Philippines has traditionally leaned on its bilateral ties with the U.S., but less on ASEAN solidarity. Now, how important today is regional cooperation in avoiding results like this?
Well, again, a lot of scholarly studies have actually emphasized that ASEAN solidarity is very crucial. The ASEAN bloc has a bargaining power when it speaks as a whole, when it speaks as one voice. For the Philippines, yes, I agree that we tend to rely more on our bilateral goodwill with the US. That's why this is a wake-up call for the Philippines to actually start leveraging ASEAN frameworks, even the RCEP, the Regional Comprehensive Economic Partnership. Otherwise, we risk being out-negotiated by any other countries, particularly in our region.
Now, Philippines is a very strategic location here in Asia. Now, from the perspective of Vietnam and Indonesia, what did they do differently now that allowed them to secure more favorable terms in spite of our strategic location?
Well, before so the Philippines is actually leveraging on our strategic position in the region. But then it's very interesting to note that Vietnam and Indonesia actually did something different. And that difference is the fact that they treated trade talks as part of a long-term industrial strategy. For instance, in Vietnam, they paired negotiations with reforms, structural reforms, investment reforms to attract supply chain relocations to their country. Meanwhile, Indonesia actually used its large market and resource base as bargaining chips. So they actually linked domestic policy with international talks, something that the Philippines is still working on.
When you say the Philippines is still working on this, what's the gap? Where do we need to focus on in terms of trying to get better leverage?
Well, the Philippines has actually made significant stride, particularly in relaxing constitutional constraints that will allow the entry of firms, of investments in the country. But then the implementation remains to be there's still an opportunity for it to be improved, and as well as the ease of doing business. So creating an ecosystem for doing international business in the Philippines would actually be a big step, no, towards launching more reforms to attract supply chain relocations to the Philippines.
Now, looking at it on a practical level, JP, how does this affect Filipino exporters? Should industries be worried about competitiveness, or is the impact manageable right now?
Well, it's very interesting to look at this as well from a microeconomic perspective. Well, exporters in sensitive industries like electronics, agriculture, garments, which is to be affected by the tariff, they will actually be facing tight margins compared to competitors from Vietnam and Indonesia. While it is not catastrophic as of the moment, it does erode our competitiveness and can influence investor decisions on where to expand production in the medium term to the long term. But for now, we would have to manage it. It's not yet catastrophic, but planning for the medium term and long term impacts of this should be prepared.
Now, do you see this outcome discouraging investors, particularly those comparing us with, again, Vietnam and Indonesia?
Well, you know what? No, investors do notice. Okay, investors notice that the differences in tariff rates imposed, and in reality, multinationals do compare tariff rates, supply chain integration, even infrastructure across ASEAN. So if they see the Philippines at a disadvantage because of a very small tariff differential between other economies, so they may choose Vietnam or Indonesia for their next plant. Well, again, as what I have mentioned earlier, this may not take effect immediately in the short term, but over time, this will actually weaken our attractiveness for foreign investors.
Hopefully, we can actually do something about that. Okay, JP, we still have much to discuss, but we'll take a short break. Follow the money. We'll be right back. Welcome back to Follow the Money. Still with us is JP Rivera, Senior Research Fellow at the Philippine Institute for Development Studies, as we continue our discussion on the new U.S. tariff deal and its impact on the Philippines. Now, JP, we looked at Indonesia and Vietnam. Now let's look at Japan. After our deal, they secured a 15% rate. How should we interpret this in terms of the Philippines standing as a trade partner?
You know, this is another interesting angle to look at from developing economies to a developed one. Well, Japan's outcome actually underscores that trade partners weigh economic weight and strategic value. So if a developed country like Japan secures better terms than developing economies like us in the Philippines, it actually reflects the perception that the Philippines is actually a smaller and less critical trade partner for the U.S. as far as the U.S. is concerned. And this is actually a wake-up call for the Philippines to actually start being more strategic, being more proactive, long-term planning in terms of securing trade partnerships, trade deals, to be less reliant on a single economy.
Now, if these gaps continue, do you think the Philippines risks losing further ground in ASEAN's position within global supply chains?
Well, thinking about it, absolutely. So, if these gaps do persist, well, the Philippines, we actually risk being sidelined in the regional supply chains because our neighboring economies are advancing faster than us. Tariff disadvantage, just like what's happening right now, it actually adds to existing constraints like logistic costs, even regulatory hurdles. It can actually, if I may say, compound our relative decline in competitiveness across a longer time period.
Now, do you think because of this, we should strengthen more ties now with our ASEAN neighbors more than when we look at the US or other trade partners like the EU?
Yes, we diversify. So in previous discussions, we were arguing that we need to continue the negotiations. But after the outcomes of successive negotiations with the US, the strategy now is to actually strengthen diversification, forge more regional trading agreements with EU, with ASEAN. And you know what? There's an opportunity for the Philippines to leverage on our commitments and the benefits that we can get from RCEP, and the recently signed uh, regional trading agreement that we had.
Now, we see the government is also doing its part in terms of trying to build up the economy, to get in more foreign investors. Now, for the private sector, what kind of partnership now should the government have with the private sector here in the Philippines so that we can build a better image of the Philippine economy, doing business here in the Philippines, to strengthen and give us more leverage in the future?
Well, in terms of, let's say, the partnership, no, the collaboration between government and the private sector, the objective has to be clear that our enterprises in the Philippines would need to move up to the value chain. Meaning, we should not just be a supplier of raw materials, but the Philippines should also be capable of producing and exporting work in progress and mostly finished goods product, so that we have that leverage. And the private sector would have to be given an ecosystem, an environment wherein they can actually be given the skills, no, the training, the opportunity to be able to go beyond the basic production that they are doing right now. And again, that's what I have mentioned, the direction should be moving up the value chain.
Now, in the research, it has been stressed the importance of being proactive. Now, what would a more proactive trade strategy look like for the Philippines?
Well, that's an interesting question because it is actually an intersection. So what I mean is a proactive strategy would need to find that intersection, that alignment between domestic industrial policy and trade diplomacy. It's a confluence of both economic and non-economic approaches. So to be specific about it, this will include proactive strategies would actually include export diversification, joining more trade agreements, leveraging the ASEAN platform, that's what we have mentioned earlier, and preparing negotiating positions that is actually backed up by data, by studies. But to put it simply, no, it is about anticipating where global demand and supply chains are moving, and we position the Philippines there.
So basically looking at where the opportunity is. Now, you're mentioning trying to strengthen the ties between the Philippines and our ASEAN neighbors now. But how can we balance now the government-to-government negotiations with the need to build a stronger domestic industry?
Well, on top of head right now, so the Philippines, government to government, we need to strengthen alliances, industries at home, domestically. And government agencies can have this convergence towards better infrastructure, skills development, even innovation. So we have something to bargain with abroad if ever we would be continuing with our trade negotiations further. So trade policy, industrial policy, convergence with different government agencies, they must move together for better negotiations and to be able to join the regional trading agreements.
Now, JP, we're looking at the issues that's hounding now the country in terms of certain projects. Now, how important now is accountability, transparency, and efficiency? How does that play out now in terms of what's happening in the country?
Well, the transparency and accountability, they always have to be packaged together. And the Philippines should be able to project itself as a reliable economy, as a competitive trading partner, because we actually possess the following: the accountability, the reliability, that, hey, even if we are a small economy, we are an economy that big economies can actually rely on. So that gives us an edge, that competitiveness, which may not be reflected in terms of tariff values.
Now, when we talk about ease of doing business here in the Philippines, are we really seeing an ease of doing business, or is there still a gap that needs to be fixed or needs to be done so that it's much efficient, more transparent, and more accountability on that part?
Well, when the ease of doing business has been enacted, it's currently being implemented, it's actually a welcome. It's a welcome development. But again, no, the implementation would have to be strengthened. The implementation would have to project that the ease of doing business, actually living to its name, which is really making business easier, not only for foreign investors, but also for our domestic investors. It has to be a reality beyond the papers that we have. So that remains to be a challenge.
Are there current research being done by the PIDS in terms of that focus on ease of doing business? What's your observations on that?
Well, the studies that we have currently, as far as I am aware of, is really on what improvements can be done in the implementation. But impact-wise, I'm not sure as of the moment if there are already estimates regarding that. But the common goal really here is to leverage on this ease of doing business to be able to be used as a leverage. It's a leverage to be able to attract investors. That together with developed economies in the ASEAN, we're actually moving towards allowing for a better environment for the conduct of business in the country.
And talking about trade relations and US tariffs, JP, if you had one clear message for US trade officials about the Philippines' position moving forward, what would you tell them?
Well, the Philippines remains to be a reliable and competitive partner, particularly in the Indo-Pacific. To be clear about what the Philippines need to position itself, no? The Philippines fully support, no, a fair framework where our exporters, trading partners can actually compete on equal footing. Because it actually strengthens not only the US, not only the Philippines, because trading makes everyone better off.
Okay, now, JP, let's now go to our rapid fire questions. Just answer yes or no. You don't have to explain your answer. Let's start with this. Did the Philippines win the trade showdown against Indonesia and Vietnam? Yes or no?
Yes.
Is the Philippines just playing defense in trade talks?
Yes.
Can ASEAN teamwork be the secret sauce for better deals in the future? Yes or no?
Yes.
Should Filipino exporters start sweating over competition?
Yes.
Okay, will stepping up our game in trade talks change everything?
Yes.
Complete the sentence, JP. Money is the root of all.
Money is the root of all strategies.
That's very good. That's what we need actually moving forward. Thank you, JP, for your insights and how to move forward. And hopefully in the future, we can have a better leverage with our ASEAN partners and also the US and the EU. Thank you, JP.
Thank you very much. Maraming salamat.
When it comes to trade, some principles remain timeless, as former US President Ronald Reagan once said. Trade is an economic alliance that benefits both countries. There are no losers, only winners. And in a world where trade deals shape markets and competitiveness, understanding the Philippines' position is about more than tariffs. It's about strategy, regional solidarity, and the future of our exporters. From negotiating leverage to investor confidence, these choices will define how the country holds its ground in ASEAN and beyond. I'm Robert Tan. Stay curious, stay sharp, and always follow the money.